The Nasdaq sees its worst day since April, led by a sell-off in tech stocks as investors rotate out of AI stocks. S&P 500 also closes lower, while the Dow Jones index bucked the trend to gain over 0.5%. Asian markets trade largely higher despite weakness on Wall Street. The GIFT Nifty is also suggesting a positive start for the Indian market. Crude prices gain. Brent moves above $86 a barrel as tensions simmer between Lebanon and Israel. Gold gains on safe haven buying and a weaker dollar, while Bitcoin's correction continues as it tumbles below $60,000 to start the week. Over 96,300 crore worth of spectrum goes up for auction today. Bidding is expected to be muted, with earnest money deposited by telcos being significantly lower compared to that in the 2022 auction. India's current account swings to surplus in the last quarter of FY24 after logging deficits for 10 quarters. This is largely driven by strong services exports and remittances, but capital flows were marred by a fall in foreign direct investment. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we're tracking for you. And the bigger one is that Nasdaq has seen a sharp fall overnight, the lowest since we have seen in April. But first up, let's take a look at the Asian markets because we'll see the impact on the Asian markets as well. They're quite mixed right now. The Taiwanese index is down 180 points, but we do have some green on Hang Seng, 117 points higher. And remember, this comes in after cuts that we saw across the Asian markets yesterday. Only Nikkei was the one which was in the green. But today, quite a lot of them are in the green, barring Shanghai and the Taiwanese index. The GIFT Nifty, that'll come up for you on the screen, and that one is indicating that the start for our own market, well, that could be in the green today, 22.5 points higher on the GIFT Nifty right now. So looks like it could be another day in the green. Remember, there was a massive recovery from the lows. But yeah, we closed flat with some positive bias on the Nifty yesterday. And in the US market, Wall Street ended mixed with tech-heavy Nasdaq plummeting 190 points, marking its worst day since April 2024. Chipmaker Nvidia fell 6%, pulling all technology stocks lower, forcing investors to move to other sectors like banks and energy. Dow Jones scaled 260 points, while S&P 500 slid 0.3%. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets were mixed across the major indexes in Monday's trading session, with the Dow jumping more than 250 points as investors started selling off tech names and moving into other sectors of the market. At the end of the day, the Dow closed up 261 points. The S&P 500 was down 17 points, and the tech-heavy Nasdaq fell over 190 points, driven in part by Apple pressure. European regulators are accusing Apple of violating the bloc's new tech rules. They allege that the company breached the Digital Markets Act because it does not allow customers to be steered from the App Store to cheaper options. Today's action follows a probe opened by regulators in Europe earlier this year. Apple says it has made a number of changes and believes that its plan complies with the new law. Meantime, pharmaceutical giant Novo Nordisk announced that it will spend $4.1 billion to build a new manufacturing plant in North Carolina. The company is looking to boost its supply of the blockbuster weight loss drug Wegovy and diabetes drug Ozempic, along with other injectable therapies. Demand for those so-called GLP-1 drugs has outstripped supply, leading to shortages. The company said it plans to invest a total of $6.8 billion this year in manufacturing, up from $4 billion in 2023. That's what's happening here in the U.S. Back to you in Mumbai.
All right, that's the U.S. market update. Let's move on. San Francisco Fed President Mary Daly points to possibility of weak economy and says the central bank is still fighting to bring inflation to 2%. Austin Goolsbee, president of Chicago Federal Reserve, aligns to Daly's comments, suggesting inflation is a real point of concern. Listen in.
I think we've got somewhat historic restrictiveness. The Fed funds rate minus inflation. The real Fed funds rate is as high as it's been in decades. When you want to be that restrictive is when you feel like there's danger of overheating, or as we did in the U.S., if you get the inflation rate up too high. Second half of last year, we had outstanding dual mandate performance. That is, inflation came down almost as much as we've seen in any year, and we did not have a recession. Start of this year, we saw inflation kicking back up, and we've been trying to figure out and determine from the data, is that a sign of re-overheating, or is that just a blip? Then you would have to start questioning, should we remain as restrictive as we've been? See the progress that we have been expecting on housing beginning. Hopefully that continues. And on services and on goods, there's still a decent run rate. So even the 3 bad months, we really had one awful month in January. And then it's been improving since then. And that was preceded by 7 outstanding months. So I'm hopeful that we're going to get a little bit more confidence that on the inflation side, we're heading back to 2.
Okay, that is some expert opinion coming in. Moving on, Richard Bernstein hopes to see more broadening in the US markets and pokes the question to investors on what makes the Magnificent Seven unique. Let's listen into his take on the recent rally in US markets.
I think we should all hope that this market broadens because the fundamentals are broadening. You mentioned the economy, but obviously what's more important to the stock market is corporate profits. And the reality is right now that just in the S&P 500, there's about 160 or 170 companies growing earnings 25% or more. So the question that every investor should be asking is, what is so unique about the Magnificent Seven, about this narrow leadership, if so many companies are growing? I think what we're starting to see, slowly but surely, is the market starting to appreciate that there is nothing unique about this small set of companies, that profits growth really is revving up, and this is actually quite normal in a period of profits acceleration.
Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have a research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hi guys, a very good morning to all of you. Hormaz, let me come across to you first up. What are the market cues we need to watch out for in today's trading session?
Good morning, Sonal, and I wish I could tell you that the setup is looking very buoyant because of India beating Australia last night. But then the setup indeed is positive, on the positive side, and that comes from the recovery that we saw in yesterday's trading session. The market texture overall remains that the bulls wanted a dip, they got the dip, and that dip was very convincingly bought into. The good part is that the Nifty not only recovered from the day's low, it ended with gains and also close to the day's high. So that will give the bulls a lot of heart, and above the mark of 23,500 as well. The Nifty Bank also saw a similar price action. It also saw a dip towards 51,100. It maintained that earlier record high that it had of 51,133, reversed from those levels. Around 600 points it recovered from those levels as well. So that was a good sign for the Nifty Bank as well. The broader markets also recovered from the lows. The mid-cap index ended in the green, but the small caps, it ended with losses, but off the lows of the day. Now, some of the key levels to watch, of course, 23,600 on the upside for the Nifty, and of course the previous record high of 23,664. And the Nifty Bank, after that recovery, now is just 250 points away from its own record high, which is around the 51,950 mark. What did well yesterday? The consumption-oriented stocks did well, autos did well, FMCG did well. The metal stocks put a bit of pressure on the market yesterday, a bit of profit booking there, as is seen in the PSU banks as well. And what we need to watch out for today, it's Tuesday, so it's the financial services index expiry, so that will keep the Nifty Bank in focus as well. A couple of pockets were very active yesterday. Fertilizer stocks were up and running last week, saw equally sharp sell-off yesterday. We'll see if that continues today. And in the holding companies as well, the US market handover is not very clear, but the direction seems to be on the positive side, and the GIFT Nifty is also indicating a slightly positive start for our own markets. Back to you.
Okay, all right. Thank you so much, Hormaz, for that. Let me go across to Abhishek, who will list out all the stocks to watch out for in today's trading session.
Well, to begin with, Shalby, they have terminated their franchise agreement with Madhuban Orthopedic, and this is due to the breach of various terms and conditions of agreement by the franchise. Amar Raja, the arm has signed a technical licensing agreement with GIB Energy, and this is for lithium cells to the arm. Borosil, they have launched a QIP at about 331.75 per share. Now, remember that in Jan, they had taken a board approval for a fund launch of rupees 250 crore via QIP. Talking about fundraise, AU Small Finance Bank and RBL Bank will take fundraising approval from their board on 27th of June. Muthoot Capital has initiated registration process as a corporate agent with IRDAI. Craftsman Automation, they have signed an AUM with Sunbeam Lightweighting Solutions, and this is to acquire whole or part of the business of Sunbeam in one or more 4 tranches. Bandhan Bank, they have RBI appointing an additional director on their board. So this is to smoothen the management transition process that RBI wants Bandhan Bank to undertake. Now, promoted to sell 6% stake in Happiest Minds via block, and All Cargo Gati has launched a QIP to raise up to rupees 200 crores. Back to you.
Okay, all right. So those are some stocks which will be on our radar, and fundraise, QIPs and block deals galore as well. But let me go across to Mangalam. He's joining in with all the cues from the FNO space. Hi, morning, Mangalam.
Good morning. So yesterday was a good day for the bulls. We opened with a gap down, and thereafter we saw that being recovered. And towards the end of trade, we actually saw a near 200-point recovery for the Nifty from the lows and 600 points from the Nifty Bank itself, telling you that the market is still in a range, because earlier we tested the higher end of the range and yesterday we tested the lower end of the range. So for one to get a sense of what this range is like, just look at June 21st high, which was 23,667, and yesterday's low of 23,350. So telling you anywhere around 23,300 to 23,700 is the broader range that the street is expecting for this expiry week, largely because the next expiry season is a lot more event heavy than the next couple of days itself. There was some selling by both DIIs and FIIs in the cash market, but that again was colored by a lot of large trades that took place. What really stood out in index futures was an 1800 crore purchase in index futures by the FIIs. In fact, they added around 28,000 long contracts and just about 450 shorts. So as a result of which, the net long exposure, which was at 57% yesterday, has now inched mildly higher to around 59%. And the overall long contracts are now nearly 1.01 lakh contracts. Remember, just about 7-8 trading sessions ago, this was 3.11 lakh contracts on the short side. So we've seen a recovery of nearly 4 lakh contracts with the market moving higher. But now with consolidation expected, the range that you're looking at, 23,600 call writers, very active in trade, and we have the 23,000 put writers as well, 23,500 put writers equally active, telling you again the range that we're talking about, 23,300 to 23,700. Fin Nifty options expiry today, so that's something we'll be watching out for. And a couple of stocks that have entered FNO ban, Punjab National Bank and SAIL, and we have HAL and Hind Copper, which have come out of FNO ban. So those will be a couple of stocks we'll watch out for.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, over 96,300 crore worth of spectrum goes up for auction today. We'll get you more on that on the other side. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. In key macro data, after logging a deficit for 10 consecutive quarters, India's current account has swung into surplus. According to the Reserve Bank data for January to March quarter, current account surplus stands at $5.7 billion, which is 0.6% of the country's GDP. For the full financial year, current account deficit narrowed to $23 billion against $67 billion in FY23. But foreign direct investments saw an inflow of just $2 billion compared to an inflow of $6.4 billion a year ago. And in the run-up to the union budget, Finance Minister Nirmala Sitharaman held pre-budget consultations with representatives of trade unions and labour organisations. The unions presented a list of demands, including a hike in minimum wages from 15,000 rupees to 26,000 rupees. The representatives sought that the wages of ASHA, Anganwadi and midday meal workers be increased as well. The unions urged the FM to ensure statutory minimum support price for all farm produce based on the Dr. M.S. Swaminathan Commission. And just days to go for the budget, government is tempering expectations of potential tax cuts. Timsi Jaipuria is here with more. Timsi.
Well, that's right, tempering the expectations for a possible tax relief for those earning up to 15 lakh rupees per annum. Senior government official has told CNBC TV 18 that no such proposal is under discussion as of now. Rather, such changes would have significant revenue implications for the government. Thus, they feel that these media reports are a little misplaced. Remember, this clarification comes amid reports hinting at a potential windfall for the middle class. The most likely scenario mentioned in these reports involves changes to the current income tax slabs of 20% and 30%. Government has already announced a new tax regime, and what government officials indicated that it also brought in changes to make the new regime more attractive. And they said that the filing period under the new revised income tax regime, which is the new regime and which was made further simpler, has just started. So it is too early to assess the impact and judge whether any new changes are warranted or not. So thus they say that as of now, no such proposal under discussion, and yes, it would mean a lot of revenue implications for the government.
Oh yes, of course. Thank you, Tim C, for bringing us all those details. We'll keep coming back to you for more on this one. The Ministry of Mines launched the fourth tranche of auction of critical and strategic minerals. My colleague Abhimanyu spoke to VL Kanta Rao, the Mines Secretary, and discussed the priorities of the ministry going forward and the expectations from the foreign players. Listen in.
For us, it is not primary that we make a lot of revenue out of this mining. What is important is that these are critical minerals, and India is 100% dependent on critical minerals. So therefore, our first job is to ensure that the production from these blocks happens at the earliest. So let's talk about those blocks which have not taken off. So some of these blocks we have reviewed. So some of those blocks we will spend some more money and do exploration. Some blocks, I think the problem could have been a bit of communication. We will do 1 or 2 road shows to convince the industry that these blocks are good and there is good amount of resource available. So therefore they should be bidding. And as I said, the minimum bidding price is kept so low. It's very attractive for them to get into bidding. Good thing about some of the foreign players is that they have the technology for the next step, which is the processing, which is critical. So therefore, we are hoping that in the current 2-3 tranches that are going on, we can expect some foreign players to establish a 100% Indian subsidiary and participate in the auction.
Okay, all right. That's the word coming in from the Mines Minister, and we'll keep getting you more excerpts of that conversation through the course of the day. But for now, we'll slip into a short break. When we come back, we'll talk all about the cues from the commodities market. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV 18. Over 96,000 crore worth of airwaves are up for grabs in the telecom spectrum auction set to take place today. Reema Tendulkar is joining us here to tell us more.
Thanks so much for that. Let's start with the details first. As you pointed out, a spectrum worth 96,317 crore is up for grabs, and this is across various spectrum bands: 800 megahertz, 900, 1800, 2100, 2300, 2500, 3300 and 26 gigahertz. Now, there is an earnest money deposited by telcos, and this is how it stacks up. 3,000 crore rupees by Reliance Jio. Bharti Airtel is about 1,050 crore, and Vodafone Idea is at 300 crore rupees. This enables the companies to bid up to a multiple 10x, 11x, 12x. The earnest money which has been deposited by telcos this year is significantly lower than what we've seen in the previous auction, which was in 2022. In fact, if you pull up the numbers, if you see, for something like a Reliance Jio, this year, they've put in an earnest money deposit of about 3,000 crore rupees, which is sharply lower, more than 80% lower than 14,000 crore that they deposited last year. Similar picture for Bharti Airtel. This year, the earnest money deposited is 1,050, again, much lower than 5,500 that they deposited last year, which even for Vodafone Idea, which basically tells you that this time, there is a possibility that the bidding is going to be very limited, because the amount of earnest money which has been deposited by the telcos allows them to only bid for so much, which will be significantly lower than last year. Jeffrey says the total bid amount to be the lowest since 2014. Quick reasons why we're expecting such a muted auction this time. One, 5G related auctions spectrum purchase has already taken place. Companies like Bharti Airtel, Reliance Jio have already finished their 5G rollout. So the focus will be on renewal of spectrum. Now here Reliance Jio, which has deposited the maximum earnest money deposited, does not have any spectrum renewal. So how much will they bid for? Bharti Airtel does have some spectrum which comes up for renewal, but here the question is, will they bid for that sub-gigahertz band which Reliance Jio had purchased in the prior auction? And for Vodafone Idea, considering all the, financial, the situation it's been in, expect very limited participation this time. According to analysts, some numbers I picked up is about 1,000 to 1,200 crore of bidding. Back to you.
Okay, all right. Thank you so much, Rima, for bringing us all those important details. So this is the big event we'll be watching out for. Moving on now and talking about the commodity space. Manisha Gupta is joining us with all the update as always. Hi, Manisha. Good morning. Which is the commodity in focus today?
Morning, Zonal. Thank you for that. Well, I'm looking at the crude oil prices, which is headed for a monthly gain of 6% in the month of June. Remember, May wasn't so great, and May actually was the worst performing month for this year until now, but June clearly seems to be doing quite well. There is strong US dollar, which is weighing onto the prices, but then again, you have seen inventories continue to decline in US. There are escalating geopolitical tensions when it comes to Israel and Gaza, Ukraine and Russia. There is further attacks on Russian oil facilities via Ukraine drones. And then you have Petro-Ecuador also declaring force majeure on some shipments. There also are bans now coming in on reloading Russian LNG in Europe. So there's various things that the markets are looking at, and nobody really is going short at this point in time. What is really going short actually is the base metal prices. Well, the strength in US dollar seems to be weighing here. The China data is not so strong. The immediate demand is not there, and you have inventories gaining up as well. So you have a 2-month lows right now coming in for steel and copper. There is pressure that has continued in iron ore. So actually all metals for a second straight day in this week have started weaker.
Okay, all right. Thank you so much, Manisha, for joining us as always. So those are the commodities on our radar today. Let's move on now. Pulses, onion and tomato prices have surged following a record heat wave in the country. The centre has imposed stock limits to keep the rise in prices of pulses in check. The government has bought over 70,000 tons of buffer onion stock and expects prices to stabilize as the monsoon progresses. CNBC TV 18's Abhimanyu Sharma spoke to the Consumer Affairs Secretary on the pulses, stock limits, onion prices and more. Listen in.
As you would know that because of heat wave and a very intense at that, the prices of pulses had been stable but very high for the past 6 months, and therefore we were also trying to import them from wherever it was possible, but all this was not softening the prices, and therefore we thought as a last resort to impose stock limits on pulses and make sure that beyond this limit, if any of the entities are found to be carrying the stocks, they will be confiscated and they will be seized, and the entities will be duly taken for the penalty that has been in the Essential Commodities Act. Now, we are now witnessing that there has been now a decline of say between 50 to 200 rupees per quintal in all of these pulses, and that shows that actually the imposing of stock limit on pulses has been very, very beneficial. If the Kharif, sowing of onions, which has already, we can see that the area has actually increased from 2.5 lakh hectares to about 3.5 lakh hectares across the country. I think the production will also give everybody a sense of comfort to further, bring, say, ease to both the farmers and the traders as well as consumers.
Okay, all right. That is the word coming in from the minister. We'll keep getting you more conversations on rising prices, food prices across the country, of course. But ending the show on a positive note, Team India exacted a measure of revenge over Australia in yesterday's Super 8 face-off at the T20 World Cup. The Indians had a point to prove after being knocked out by Australia in the ODI World Cup, and captain Rohit Sharma's 92 of 41 balls set the tone. The Australians set a target of 206 runs, and Travis Head again threatened to take the game away before being dismissed by Bumrah. The Australians could eventually only manage 181 runs from 20 overs. India will now meet England in the semi-final, while Australia's fate lies in the hands of Afghanistan, who are currently in action against Bangladesh. Okay, those are some lovely visuals, and of course, go Team India. But with that, we'll take your leave on this edition of Power Breakfast. Bazaar Morning Call comes up next.